Today is Tuesday, March 26, and this is another update on my progress beating the S&P 500 along with the Ark Innovation ETF. I do make these videos every Tuesday and Sunday, so if you want to follow along, hit that subscribe button and let's get into it. So the first chart we're going to check out is the VIX. Basically what this does is it tracks the implied volatility in the S&P 500, and how they do that is they track future option prices for stocks in the S&P 500. Pretty much if the VIX is low, that's a good thing for stocks, and when the VIX is high, that's bad. This peak up here was the beginning of COVID, so that kind of gives some comparison. This area up here was last year's October lows. You can see it was right around 20. Since then, during the bull run that we've had, it just keeps dropping all the way down to here. But since then, it's kind of been following this trend line creeping upwards, which is one of the reasons I decided to go all cash right now. Just like all the other charts, the blue line is the actual price, the green line is the 5-day moving average, and the black line is the 15-day moving average. And these purple lines are just trend lines. If we zoom in a little bit, you can see that the actual price is just about to cross the 5-day moving average, which would normally be good for stocks, but in this case, it's the VIX, which tracks volatility. So if the actual price moves above the 5-day, that's bearish, especially if it crosses the 15-day moving average and then jumps all the way up to this trend line right here. And I think that that's going to be a good place to at least get a little bit back into some of my other positions. So this chart is the same SPY chart that we've been checking out the last couple episodes. This first arrow, 321, is where I decided to sell half of all my positions. And then the second arrow, 322, is where I decided to sell the rest of them, putting myself in all cash. Right now, the price is pretty much dead even with the 5-day moving average. I definitely don't want to be in cash for too long, but given where my gains were so far in the year, I felt like it was a good spot to kind of just reset everything. I am kind of looking for the price to drop down to the 15-day moving average, which will probably be bouncing right along this purple line. And to get to that trend line, it would only have to lose about 1/3%. So this Friday is Good Friday, so the stock market's going to be closed. So if I was going to make any moves this week, it's either going to have to be Wednesday or Thursday. I'm definitely not looking to make any moves tomorrow. There's a chance that I might open up a few positions on Thursday before the weekend. Ideally, in a best case scenario, right in this area is Monday. So I want the price of the SPY to be all the way down here. Then I'll be looking to buy back into some of my other positions with the hopes of kind of catching a rebound in this direction. If Monday we do open up down here, to get to this other trend line, be about 1.5% or so. And like I said in my last video, the S&P 500 hasn't seen a 2% single day drop in over a year. So this is kind of playing into that perfectly. If it was going to have that drop, it would drop us right to this trend line, which is why I'm ideally looking to buy stocks at Monday's open and not at some point on Thursday. Since Monday, my portfolio is unchanged since I'm all cash. The S&P 500 dropped 0.57% and the Ark Innovation ETF gained 1.25%. Which brings us year to date, my portfolio has a gain of 16.89. The S&P 500 has a gain of 9.71. And on the year, the Ark Innovation ETF has a loss of 0.93%. That's all I got for today. I do make these videos every Tuesday and Sunday. So if you want to follow along, hit that subscribe button and I'll catch you on Sunday.